Good morning and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. Of course, if there are any questions along the way, feel free to let me know, even though at the end of every segment, I will give you time to ask questions. So we will have a notepad to jot down the notes. Of course, you guys can do the same, and we will open the webinar with the introduction to AvaTrade. Maybe we'll bring back this to the full screen. There we are. Okay, so as many of you know, AvaTrade is a regulated company. We're here for nearly 2 decades, since 2006. In case you got a question or a query along your journey, you can find our customer service right here at the bottom left. You can chat with us or send us a WhatsApp, whatever you prefer. The other way to contact the customer service is directly via cs@avatrade.com. Of course, if you got any questions about something related to trading, regarding analysis, regarding risk money management, your strategy, just to get a bit better, more familiar with the platform, you can have a senior account manager that will give you full support through the process. And if you've made a deposit and you don't have one, you can contact the customer service and they can help you for someone to be assigned. On top of that, as we said, we will have the webinar today using the WebTrader desktop version. Obviously, what we're seeing now is a computer screen. This is the desktop screen, but we also have an app. It's called the AvaTrade's Trading app, which allows you to enjoy similar features that I'm going to show you here today. But before we'll do that, I would like to also write down the other platforms we have, which is MetaTrader 4, MetaTrader 5, Ava Futures, and Ava Options, and lastly, Ava Social. Traditionally, we're going to say a few words about Ava Social, since this is a webinar for beginners, and Ava Social has a very unique way to assist all clients, but especially beginners, and I'll explain to you why. Ava Social, what it offers, the main idea is to let you do copy trading. How does copy trading works? Let's suppose that we're trader A and we would like to copy trader B. It doesn't matter what level I'm at. Copy trading allows me to trade automatically by linking my account into another trader's account and to trade automatically, which can be super comfortable. There could be many reasons. One is that I don't have the time, so I want it to run automatically. Another reason would be experience. Maybe I don't have a lot of experience, so I'm not sure how my strategy is going to be, so I'm happy to copy another trader. Then when I feel confident and I have enough knowledge, then I can carry on. There could be a lot of reasons for this to be useful. The app itself, Ava Social itself, is free to download, so I recommend you guys to explore, whether if you're a beginner or not. On top of that, what if I, for instance, wants to, let's suppose if we have, as you can see right here at the top, we've got $10,000 in balance. But let's suppose the trader B has a higher amount, let's say 50, but still I want to copy traders B's strategy. So what will happen in this case? I might not have the budget, the same as trader B, to do the same, to use the same strategy. In this case, what we can do in Ava Social is we can customize the lot size to be lower. This way we need to use less margin, and we will be able to withstand trader B's margin requirement. Of course, if I would like to have the same result, I need to have the same balance. Okay, I hope it makes sense. If there are any questions until this point, guys, for anything that I said, feel free to let me know. Now, we're gonna carry on with, like I said, a web trader, which will be what we will use today to do the webinar. As I said in the beginning, to access this, all we gotta do is just to log in with our email and password, and in our personal area under trading platforms to click on web trader or web trading. And this is what we're going to see. Maybe we're going to see it like this. Maybe we're going to see it like that. You can see that I can toggle up and down through those using those tiny arrows at the upper right. Now, the way that it's constructed is at the upper left, we've got our personal details in those 3 lines. Underneath, we've got the trade. This is where we are. Underneath, we've got positions, if we would have any positions, which we can modify in here. Orders, the exact same way. History, if we click, we can define what range we would like to be displayed in here. Signals. Okay, so this is one way to access the signal. You probably noticed that this tiny lightning icon can be found on other instruments as well. Now I went back to the full to show you that I can access the signals also from here. What is the difference between using the signal from here or from the signal section? As you can see, in the signal section, the way that it's listed, I also have categories in here and I can search in the categories. And the advantage using it from here is that we're seeing what's the newest signal that was just analyzed, and at the bottom, if I'll scroll down, what we've got is the oldest one. Yeah, it's getting older and older. So of course there is a certain logic for me to want the signal as soon as it was analyzed, because then I can do the proper assessment. I'm also going to show you a scenario when a signal is no longer useful. Okay, the advantage doing it from outside is if I would want a specific instrument that I'd like to trade, I don't want to search through the list and all of that. All I want is just to know, as an example, if gold has a signal. Okay, so one way is to go back to where we were. Another way is to put here gold, to click on gold, and then we're going to see that gold does have a signal. Okay, it shows this blue lightning icon, and if we click it, then this is what we are going to see. It's the same way as the signal section, but in here I can search. If I don't have a particular instrument and I would like to search from the list manually to get inspired by what is in here, so I can just scroll down and manually select what I want. Let's, for instance, use the, we've got Dow Jones at the top, so we're going to click again on View Signal. It works the same way. You see this side panel was open with this analysis in here, resistance, support. Okay, we still don't know what it means, and that's fine. We're going to cover that in 2 moments. But before that, I also want you to see that the same values that we have here next to TP and SL are also the same values for here for the take profit and the stop loss. And of course, TP stands for take profit, stop loss stands for SL stands for stop loss, and the entry is what we would assume that was the initial point that was analyzed. How does that work? How is this signal can help us? The way that it works is based on those support and resistance, which we'll elaborate more later on. Then we've got those values, and those values are set for us automatically if we just choose a scenario. So we see here that we are with a buy, so we're going to click buy. And now we see that the values are set for us, and we can simply click here buy and launch the position. Of course, we can make any kind of modifications if we want. We can increase the lot size, we can change whatever values that we want, okay, and then to click, but we're not obligated to do it in any way. So I'm going to show you again how easy it is to use the signal. We're going to click on crude oil this time. We're going to click on view signal. We're going to click on the arrows to expand. We can also match the validity of the same chart to look at the same time frame, since now we're looking at days. But if we're looking at the upper left under this icon here for the time frames, we can click and drag, and then we see 1 day. D1, 1 day, and now we're looking at almost the same time frame, yeah, which can help us assess a bit better and do our own layer of analysis. Again, it's not obligatory in any way. I can just use the signal the same way I did with Dow Jones. So let's just click here buy, Yeah, we're ready to basically, this is how the signal is constructed. It's ready for you. You don't have to set it by yourself. I'm also going to show you of course, if you want, you can do further analysis, like I said. I'm also going to show you an example of a signal that's no longer useful. It seems like everything is still intact, but maybe we'll click on the dash. Okay, so the dash, if we're trying to use the signal the same way like we did with Dow Jones and with oil, it's not letting us. Why it's not letting us? Because the market has already reached our key level. In other words, when this signal was made and this analysis was made, there were certain levels, okay, of resistance which we can see that is always at the top and support is always at the bottom. And based on those levels, there was the signal. Why is no longer useful? Because one of those levels has already fulfilled. Okay, and this, by the way, what we spoke about in the beginning, when we are taking a new signal that just analyzed to a signal that was analyzed yesterday or a few hours ago. Okay, again, like I said, if there are any questions until this point, guys, feel free to ask. One more thing to say about the signal section is if we click here on the eye, we see, sorry, that the signals are provided to us by the trading central and not by AvaTrade. Oh, and one more thing, just to bring a bit more logic to what we just saw. In every signal, this time we took gold, just look how quick that is. Those values, those take profit and stop loss that we spoke about, are actually values that allows us to close the position automatically. Once the platform gets to that level, it will close the position with the profit. This is why it's called take profit. Stop loss, close the position automatically with a loss. This is why it's called stop loss. So if I use this exact value to help emphasize how it works, and I'll paint it in green, and I'll have another one and paint it in red, maybe because this one will be where the stop loss is going to be. Then we will see if it gets onto the green line, we will be making $100, and if it gets down to the red line, we will lose 138. This is really that simple. Of course, I can change those values, and again, the point here is to automate this position, allowing us to close it when it reaches the price, even when we are not by the computer. Okay. So before we carry on with ease, if there are any questions about the signals, feel free to let me know. Underneath, this is, by the way, one more thing to say. This is also, as we can see, since we've got numbers here, support and resistance, this is part of technical analysis. So what we're getting here is technical analysis. Okay, in trading, we've got two types of analysis, which is one, technical analysis, like we just saw, right? Averages, any kind of levels of support and resistance, indicators, and so on and so on. Fundamental analysis is any kind of news, articles, reports, governmental decision, and so on and so on. Okay. Now, why is that important? Why would I care about, just a second, why would I care about a certain report or a certain article? Okay, why would I care? because this needs to be combined. When we see something unusual on the market and we think that this is a good place for an entry, a good place, uh, like we saw support and resistance, so those kind of things has a certain logic, something that happened in the world that made those things to happen. Now, this kind of news is very easy to access in this interface. One way is just to use the news section like I just did. I clicked here and I'm in the news section. We see we've got here the pre-European market brief, dollar rebound ahead of US producer price data. Okay. Underneath, if we'll go through this article, right at the bottom, it also shows us what instruments can be related to this article. So this is one very nice way. We've got here different categories, as you can see. Underneath, we've got this globy icon, discovery, and under discovery, we can have more specific news under market buzz. And in this market buzz section, we can find, we're gonna see in a moment, we're gonna see those kind of circly bubbles. That's how it's called. And right in the middle, we've got Apple. Apple has the biggest amount of mentions. Naturally, it will be the biggest among the, as you can see, right in the middle. And if we click on Apple, it's going to take us to this parameters page, and we can see different parameters here for Apple, the price change, the different topics here, which we see product release, IPO pricing, price target raised, revenue increase, and price demand increase. Maybe I don't have a lot of time, so I'm not going to go through all of those articles. Maybe I want to focus on the product release. So this is how I can do it. Of course, it doesn't have to end here. If I find something very interesting that that I think can really have a significant impact, I can even do more research. I can Google it, and I can, take it to the next level. I think it's very useful. If we click here on the arrow, we can go back, select another thing, and that's very easy to use. We can make it look like a list, but personally, I would prefer it to look like this, just more accessible somehow. Underneath, under the discovery, we also have the economic calendar. The economic calendar let us find more official kind of official. Oh, okay, something is selected here. So if something doesn't add up in terms of how the calendar looks like, if it's gray and it just doesn't make sense, probably you've got either the date. So today we're on the 10th, but we're not selected, so we're not seeing the current date. And we see farm here is searched. So we click here on the X, and then we click here on the 10th, and maybe click on the 17th. And now when we see this blue trail, we know what dates are selected, and we can see that we're going to see news from the 10th until the 17th. Okay, apparently also Canada and US is selected, so we're going to see, click here on the arrow. Okay, let's reset the selection. And maybe instead we're going to select the Aussie, and we're going to select also the pound. And now it's only going to show us those kind of news. Another filter that we can apply is also by the impact. So how significantly we think that this event will impact the market. Will it be low, medium, or high? So if we want to pay attention only to the high impact events, we can click here on high, and then we're only going to see high impact events. Apart from that, the logic of this calendar is very easy. This is the previous result. This is the range of what we're expecting. This is the actual result. And this is, as we spoke about, how strongly we think that this will impact on the market. We don't see any result. Why? Because those events didn't happen yet. So we cannot know the result of those things. But if we would select the 9th as an example, and we're going to see what happened yesterday. So we added, I just clicked one day away, right? Nothing crazy here. I just clicked here, and then we get the result. This is super accessible, very I don't really know how to describe it. You see how easy that is to access the news, the information. So guys, use it and enjoy it. One more thing regarding the economic calendar that is even more amazing is we can see we've got this few icons: impact, volatility, price chart, event chart, and lastly, add to calendar. Guys, I want you to understand how useful that is for people who are working full time or just busy, too busy during the week. It's difficult to remember when the event is and to get onto the computer and do the the preparation and everything. This way I can book this specific event into my calendar, and then I can have a reminder, and with this reminder I can go to the computer comfortably, place my indicators, do the analysis, and be prepared. I don't have to remember during the when it's going to be. I find it very useful for you guys to enjoy. Don't book, obviously don't book like this. This is an event that already happened. So if you're going for a new one, if you're going to book an event, you're probably going to go for something that is that doesn't have the result. Okay, let's carry on. We're moving to the practical part. Finally, we're going to look at some numbers here. To go back to the default screen, a neat shortcut will be to click here on the AvaTrade. Then we can go back to the default screen. We're going to click here on the arrows to expand, and then we can search another way to do it. I'm just going to show it to you for you guys to know. Another way to select an instrument is either by the list here. We can click, and then it will open. Then we can click on the arrow, and then we're going to see only that. Another way, another nice way to do it. Let's suppose that we selected Aussie dollar as an example, and we have the chart open, and we clicked on a buy. Okay, like this. Let's suppose that we would like to check. We would like to open another instrument. Okay, like Nasdaq or what I saw that was interesting. Maybe oil. Let's see, crude oil. See, if I put here CL, it brings up a bunch of things with the same letters. And if I'll click here on crude oil, it's going to open me the chart. But what is still in here in the order entry? It's still on Aussie dollar. So to fix that, I can either close it by the X and then click here buy or sell, or directly click buy or sell, and it will display the correct instrument. So pay attention to that. It's very important. Another thing that I can do is I can split the chart. I'm gonna just go through the toolbar here from left to right. So we've discovered that this is actually a search bar, which we can delete and search whatever we want, then select it from the list. This one we saw that in the signal section, so this is very easy to change time frame. Now each candle is a day. Now each candle is a week. If I'll click on W1, upper segments will be hours and then minutes. Underneath we've got MN for months. If I keep going to the right, I can also change how the candles are going to look like, whether it's going to be those nice candlesticks or it's going to be the traditional line. As I always explain, the line is also great just to relatively check the trend, but it's not going to give you the same depths as the candlesticks. So if we switch back to the candlesticks, some areas, oh sorry, was this guy. As you can see, some areas, some parts of the candles disappears. For people who are less experienced, this doesn't mean anything, but unfortunately no, Collins. Fortunately no. Just a second. Just replying to you, Colin. All right. I hope that everyone else can see your question. Colin was asking, can you please can you share the recorded version of this webinar via email? I apologize. It's not. I don't think it's possible, but you can easily find it in our YouTube channel. I'm sure it will be uploaded in the next few days. So guys, as we've understood, this is super simple to understand. There are some parts of the candles that disappears when we switch to the line. Like I said, for unexperienced person, this would mean nothing, but we will understand in the future this bit here from the candle is super important. Okay, when we see a thin line coming out of the body of the candle, we know that those prices are prices that crude oil has been and turn around. Okay, I'm not going to go too deep into that at the moment, but just for you to see. In here, we can also enable from no crosshair into crosshair. And what this gives me is actually to analyze each and every candle. So if I click here on the arrow, click here on crosshair, and then we get the data, we get the numbers of from the candles. We can also split the screen, have multiple charts if we want, maybe even 3 or 4, depend how far you want to go. Indicators, we will probably apply an indicator very soon anyway, so I don't think there's any need to show you that now. On top of that, lastly, what I'm going to show you is what we've got here next to the sell and the buy, which I'm using 90% of the time, 90% of the time, even more than indicators. And the reason for that is it's flexible. It's flexible. I can just place the levels that I want, just like that, and pivot points that I think that can be useful. Oh, we're looking at months, okay? One more thing for me to say before we actually begin. Let's erase everything in here. Crude oil, name of our instrument. We will place target time movements price difference. I will explain, I promise you guys that I will explain every single thing that I'm doing here. And lastly, units, and then we've got here entry, TP, SL. Yeah, we've learned TP stands for take profit, stop loss stands for SL. Yeah, now we're getting down to business. We've got those foundations, those ingredients. With those ingredients, we're hopefully going to construct this position. The way that it works is very, very simple. The first thing that I want to do is to think what time frame makes sense to me, and then I can dive down and do further analysis. So at the moment, when we're looking at months, the situation seems very dynamic, as we can see the bit here between 95.18 to approximately where we are. Crude oil just kept deteriorating until the point here. Okay, it was lower, a bit lower. Let's mark that point here. And we will understand that another time frame might do a bit clarification for us. So let's try weeks. Okay, that makes a lot more sense. And let's also try days just for a minute. Yeah. Okay. Now we can see very clearly what happened, what we saw half a year, not half a year, 4 months ago, roughly. Okay, let's go back to weeks. Okay, and now we click here on the column area, the price column area, click and drag down to squeeze the chart. We can scroll up and down to better customize the chart fully to our needs. Then we can click here buy or sell, it doesn't matter, we can switch it anyway. And I actually believe that crude oil still has a way down, okay? So what I'm gonna do is I'm gonna click here on the line, click here on 77, maybe we'll flatten that out to be 78, then paint it in white. Another one, click here on the line, click here on the 55, I'll plan that to be 555. Okay, the main reason for that is just to make our calculation a bit easier. And then we've got, as you can see, I hope that everyone can see that we are somehow a little less than the middle, right? So if I would like to capture the middle here, what I can do is I can take the upper value minus the lower value, which will be 22.5, and then we can split it by 2, right? So we've got, okay, let's do it again. Okay, so this is the difference, yeah? And if we split it by half, so this is what we get. Now I can take that number from anywhere. Let's take it from 78, and then 66.75 is my center. So we're not too far from the center. Let's make it maybe turquoise. Okay, and this is where we are. So we are approximately $2 away. A little more than that, but you get the point. Now, I'm not sure that those levels are really relevant for me because we're looking at weeks, and look how many weeks. Again, I'll emphasize each candle now represent a week, right? We switched. Initially, we were on minutes, and we switched to months, and then days, and now W1 for weeks. Okay. Now we're looking at levels that let's see the statistics. How many weeks away was that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is more than 2 months ago. And in here, it's, let's see, 1, 2, 3, 4, 1, 2, 1, 2, 3, 4, 5, 6, 8. 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay, so this is, again, we're talking about May. Okay, so since May, it hasn't gotten to that level. And as we can see, the resistance, let's see if I can, okay. Basically, what we saw in the signal section, guys, the resistance will be represented with the peak point at the top. Support will be the floor, will be what we've got at the bottom. Now, not always those levels are relevant for me if they are too far, and I think that to hold it until it gets to one of those points will take too long. What I can do is I can take another line, which will be between the center into my support and resistance, and maybe I can get closer into my realistic price. So if I believe that we're going down, let's suppose that let's check days just quickly one more time. Yeah, and now we are in the right place. Great. Why did I do it? Why did I do it? When we are switching to a smaller time frame, that's like zooming into the chart. It's like we are clicking on the magnify and making it closer to the chart. You will see it in MT4 and MT5. Okay, now when we are looking at the point that we are at, if we think that it will go down, but we don't want to target 55, understanding that it's a bit too far. So maybe 60 can make sense, maybe even a little higher, maybe make it 61, okay? 61, we'll paint it in green, since this is going to be our, hopefully, our take profit. And our stop loss will be, let's maybe pull it down a bit also, pull it down. And I think our center line is approximately where we need to be. So we'll make it, I think, a little lower than that. Let's make it 65 flat. Then we'll put it in red. Okay, great. And now we see that last time that it's been on that price was a week ago. 2 weeks ago, but 3 weeks and 4 weeks ago, it didn't trigger. And the take profit, as we can see, it took it some time. So now I need to validate if, just to clarify, in a buy scenario, we want the value to increase, therefore we want the instrument to go higher. When we sell, we want the value to decrease, so we want the instrument to go down. The farther down it gets, the more profits we'll make. That also applies for our take profit and stop loss. When we are buying, our take profit needs to be higher since we want the value to increase. When we are selling, we want the value to be lower. Therefore, I'm going to also put here the 61, similarly to the green line that we drew. We click here on execute when price hits and enable that as well. Just a second, Danny, we never spoke about the execute when price hits. You're absolutely right, guys. What the execute when price hits does is also automatic. So we've got 3 pending orders. One of them is execute when price hits. Another one is take profit. Another one is stop loss. Execute when price hits is opening the position when reaching the price. Take profit is closing the position when reaching the price with a profit. And stop loss is closing the position when reaching the price with a loss. Automatically. All of them are doing that automatically. So 2 of them are closing the position, 1 of them is opening it, allowing us to automate our entry. Even if we're not on a computer, it will allow us to open it by itself. So we've placed the values that we wanted. So we've got 65, 61, and our entry can be 63. So $2 here and $2 there. We'll flatten the load size to be 0.01 since we can always increase. And now we can get to work. Now, I'm also going to set a certain target that will allow me to know how to determine the size of this position. But one thing that I notice, since our take profit and stop loss are $2 away, and we've got 10 barrels, we can make $20. Okay, if we increase to 20 barrels, we'll make 40. If we'll increase to 30, we'll make 60. And if we've got 50, we'll make 100. How does this work? We'll speak about it in a moment. So first of all, we need to set the target. In this case, my target is going to be $1,000. Okay, the time to hold this position, I think 1 week is fair, but we're going to validate this with an indicator. Now, the next ingredient that we want is to know the movements, since we want to know if the $2 away is make sense to us or not. Because we saw the statistics, right? We see that it's been a while since it's been on that price. So we need to know how much can crude oil possibly move. The primitive dinosauric way to do it is to jot down the values of the open and the close, then subtract the differences, and then accumulate into an average. So I'm just showing an example, guys. We're going to use an indicator. Don't worry, we're not going to analyze 20 candles like that. It's crazy. It's very time consuming. But whoever has free time and want to have fun, not that it's such a great fun, but anyway, you get the point. So we've got open, close. I'm just taking it from here. This is last week, nothing too crazy. Close here will be 62.22. Then we've got high. We've got low. Okay, high and low. The high in this case is going to be 66.02, and the low 61.45. Those are basically the price that crude oil began when the market was open, the price that it was closed, and then we've got the highest price and the lowest price, which is represented by high and low. Now what I'm doing is I'm subtracting those two edges from each other to know how much crude oil moved. The problem with this technique, and the reason that I said that it's dinosauric, is because we just took one candle. One candle doesn't mean anything. It doesn't stand for an average, okay? To accumulate an average, we need several intervals in mathematics. So we basically need to do this with a lot of candles. Like I said, very time consuming. So we can apply an indicator that does this for us. This indicator can be found if we click on FX indicator, type the filter, we can type AVE for average true range, then click and drag it to the right. And here we can simply customize what's the necessary length that we would like to withdraw our average from. If it's 14, that's going to be 14 weeks, since we're looking at weeks, right? Now, if we change it to 10, since we saw that 10 days ago the segment was changed, right? Again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Oh, sorry, 12. 12. So we can always change that. Maybe we'll also switch the color. Switch the color. Okay, and now we know that the average movement for crude oil per week is actually 4.3. So I'm going to put here ATR equals 4.3. Great. What does that mean? And also I'm going to write down actual expected movement, $2. Why did I write it down? Because I always want my reference to be in front of my eyes. So I've got the average movement and I've got the levels that we thought about. That appears to be in the range. Appears to be in the range. Okay? I hope let's take a little break, maybe a few seconds break. Okay? If there are any questions until this point, feel free to let me know. Okay, let's complete the last ingredient and then we'll recap. We'll recap what happened. Okay, now to get to 1,000 with $2 per barrel, how many barrels do I need? So I can go target divided by movements equals units. Therefore, 1,000 divided by my movements equals, who can tell me that? Who is good in mathematics that can help us out? What's the answer, guys? I'm gonna give another 5 seconds. Let's see who has that. Good job, Gavin. Good job, Gavin, and everyone else who wrote 500. So we're gonna try that. Click here. Okay, and then this is truly what we get. And if we place here 500, then what we get is truly 1,000. Okay, how does that work? That works like this. We've got price difference times number of units equals potential profit or loss, possible profit or loss. Since we've got 500 and we're moving $2 away from our entry, this is what we get. We've got 1,000. Now, let's recap what happened. In the meantime, I will jot down the values that we choose, which we validated with the indicator. Okay, and now we've got possible profit, $1,000. Possible loss, $1,000. Okay. Let's understand quickly what happened here, and then we'll finish the last bit. The first thing we did here was just generally to assess. We started from months, then we switched to weeks, and we saw the general picture of how crude oil looked like a few months ago. When we switched to weeks, we saw those levels, primarily the 78 and 55 and a half. We've decided that those levels are levels that statistically took more than a week to get there, right? And except for this particular week, which I'm sure has something fundamental to it. Okay, now we got closer. We've placed the center line, which was the line between this and I think 66.75, and we pulled it down. We pulled it down to be closer onto the entry in a range that we can see visibly triggers every few weeks. For instance, this 61, it took it a bit longer, but with 4.3, we can definitely get there. Okay, we can see that this is $2 away, and the average is 4.3. So we took less than half than the average, which makes me which makes me feel more confident because I know that it's realistic. It's more than realistic. Followed by that, we also increased the lot size. Our lot size in the beginning was 0.01. When we had 0.01, our possible profit was only 20 because we've only got 10 barrels. When we increased to 500, then we've achieved what we wanted to achieve. Now, you're probably asking yourself, how is this possible that with 0.01 we've got 10 barrels? I would expect to see here 1. So why? How the reason for that is because one lot for crude oil is 1,000 barrels, and similarly to gold or Nasdaq or other instruments that the lot size is 100. When the lot size is 1,000, then 0.1 is 100, and 0.01 is actually 10. Okay. Now, the only so what else can be done in this case? Because we're looking at the ratio of 1 to 1, and 1 to 1 means that I can gain and lose the same ratio. Okay, I'm not always going to be happy with that, because if I'm going to open another 3 or 4 positions with the same ratio, I'll end up possibly making or losing the same amount, right? In this case, I'm not going to be very happy if all my positions are losing, okay? Or some of them, if some of them make profits and some of them have losses, then I get to the same number. What I want to do is I want to be able to compensate a loss of several positions with one winning position. How can this be done? By adjusting the ratio. For instance, if I would like my ratio to be 1 to 2, as an example, so I want to possibly make 10%, I'm pretty happy with that, but the max loss that I want to have is 5%. How can this be done? Because we've learned that the interpretation of the profit and the loss is a result of the price difference times the number of units. What I can do is either lower the lot size, so if I take a smaller position, the impact is going to be smaller as well. So I'm going to make less and lose less. Another option is to get the stop loss closer to the entry. Therefore, if I minimize the price difference, my possible loss is going to be less, but the profit is not going to get affected. So if we are $2 away in both cases, I'm going to make this only $1 away. $1 away should bring us to 500. Okay, let's try that. And it works perfectly. Okay, and this procedural technique can be applied on other instruments as well. This is something I get asked 90% of the time. So Danny, is this only for crude oil? No, the answer is absolutely not. This system should be fine to help you construct the position for any other instrument. Now, Like I said, if there are any questions, something doesn't make sense, guys, feel free to share with me. The last thing we're gonna do today before we say goodbye is to ensure that we do have the budget to take the position. And how can we do that? As we can see, the price per barrel is 63, okay? And the number of barrels, units or barrels, okay? I'm writing it as units because units is general. Like I said, it's not just barrels. Okay, so 500. And if we go price per unit times number of units, then what do we get? The value. Okay, which by the way is automatically is, if you're using the MT4 or MT5, this equation is useful for you. If you're using the web trader, it's done for you automatically. Okay. Now the next thing we're gonna write down is the leverage. How does the leverage works? The leverage is actually a multiplier, which multiplies buying and selling, right? Multiplies buying and selling. So if we go value divided by leverage, what do we get? Margin impact. And margin impact is the true necessary amount to open the position. Okay, so if we go 31,615 divided by 10, what do we get? We get the number that we see displayed. And this is what we need to have available and not 31,000. Okay, guys, we still have another 2-3 minutes. If there are any questions, feel free to share, either about the process or about the technique here. Any questions, feel free to fire away. Okay, so Josh, you're asking about the colors of the line. Okay, Josh is asking, why did you specifically choose these colors? This is just my personal taste. There is no obligation to use there is a certain logic that I've done that is because I painted green where I wanted to close the position, where I think that my take profit is going to be, and I placed the red where I think that my stop loss is going to be. You can use whatever colors you want. This one just white because I don't know, just generally white, and yellow because I don't want to be confused by those lines as well. So there is no specific reason for that beside what I said. Interesting question. Yeah, great. If there are any other questions, guys, feel free to let me know. Okay, question from Rajan. Can you explain about support and resistance? Yes, Rajan, of course. Support and resistance are very, very simple to find. If we take a rectangle and we place it right here at the top, then we stretch it down. So let's imagine that this is our time frame that we're working with, and we would like to find support and resistance in here. So we took what we have at the top. This will be our ceiling, right? This will be our resistance. And at the bottom, we've got the support. So this will be our ground floor, our floor, basically, okay? Now, as we get closer, we have other levels, like we saw with the signals. So we can identify this as our resistance. We can identify this as a secondary support line, maybe here and here. Okay, so they are, and this is not only, by the way, for weeks. This also could be for days or any other time frame that you want. How do you calculate the exposure per trade based on the size? Okay, so Don is asking a very important question. Even though we're technically done. I'm still going to explain to you how to do this because this is a very, very powerful tool. The question here by Mr. Donnelly is, how do you calculate the percentage exposure per trade based on the account size? So the way that this can easily be done is if I will take the possible loss and I'll divide it by the balance, then I get a certain factor which I need to multiply by 100, and this works. This equals to percentage exposure from the balance. How does that work? Let's take our 500, our possible loss. We'll divide it by the balance, which equals 0.05, right? And if we multiply that by 100, how much does this will be? 5, right? Which means, yeah, very simple. I hope, Don, that this helps. And yeah, just notice that this is a calculation per position and not for the whole account. So if I would have, as I have explained, another 5 positions like this 5% will be more. So this is per position and not for the whole account. So if I take multiple positions and I diversify, what I want to do is include my whole exposure to know where I'm standing and not just a single position. Guys, unfortunately, our time is up. I really hope that everyone could enjoy the webinar and have some practical skills thanks to that. You're all welcome to join us with tomorrow's live Q&A. Until then, I wish you best of luck with trading. Have a fruitful week and have a good day.